Good morning, everyone, and we're back at another update on COVID rules in California and regulations. There's been a lot that's happened since the 1st of February, so this is going to be a brief introduction, although you may well have read about this in the paper or other sources, or hopefully our CalWorks safety team has been helpful to respond to you as well. First item that just happened this week is the California indoor mask mandate for vaccinated people has expired and is no longer in force. There are still rules that require unvaccinated people or people who have not had a boost when that's their time for it to still wear masks indoors. And this is a reminder, Los Angeles County has its own mask mandate, which continues. However, if you watch the Super Bowl, you might wonder how much enforcement or value is being given to these mask rules. But it is still a burden, and an employee can complain to CalOSHA or the Department of Industrial Relations or the Public Health Department if you're not following these mandates for your employees who are working inside who are not vaccinated. This brings up, of course, an important point that you need to have a current roster of your employees and indicate who is vaccinated and who's been boosted and who isn't, because the rules now, and they will continue to change, are going to require differentiation based on their vaccination status. And as a reminder, the Los Angeles County Department of Public Health, for those of you in LA County, which is the unincorporated areas of the county, still required to have masks for employees who work indoors and in close contact with others, and also have medical grade masks, surgical masks, or N95s available to your employees. And that rule takes effect today. It took effect last month. Just yesterday, the new poster, which is required for employers who have 25 or more employees, came out from the Department of Industrial Relations. It's a workplace posting, which if you have 25 or more employees, you need to post either on your bulletin board or wherever you digitally display posters. You can download it free from the Labor Commissioner's website, and I've listed that here. You can either just go to the department, www.dir.ca.gov, and that's the general site, and then ask for workplace postings, or you can use this link. It's available in English and Spanish. You don't have to edit it or modify it. Just pull it up and post it. The bigger issue, in addition to the posting, is the law that the legislature rapidly passed in early February and actually takes effect on the 19th of February, so we're 2 days ahead of time. But it's retroactive to January 1st. And what it says is if you have 25 or more employees, effective February 19th, this new requirement to provide COVID supplemental paid sick leave applies. Now, I will tell you in the literature, some of the things say 26 or more employees. The legislative statute passed by the legislature says 25 or more employees. So what it provides essentially is all employees for your company, if you have 25 or more employees, are eligible for this COVID supplemental paid sick leave, which we'll generally refer to from here on as SPSL because of the mouthful of words involved. But if a person is required to isolate due to COVID or close exposure, unless they're vaccinated and unsymptomatic, they're eligible for this benefit. And if they test positive for COVID, they're eligible for this benefit. If they need time off to get a vaccination or recover from a vaccination, they're entitled to paid leave. Or if they are required to care for family members who test positive for COVID. So the rules require that you would provide this COVID SPSL payment to eligible employees, meaning employees who work for you, and it applies part-time or full-time, but obviously the pay is proportionate to the regular pay the employee receives, if they make an oral or written request. So you do not have to go back and identify all the employees since January 1st, which this law is directed to, and just automatically start making payment. However, you may want to do that to be in control of the process. And because somebody may say, well, I asked my boss or my foreman for it, and I never got paid, and you don't have a record, you're going to be in a difficult spot showing compliance. Although they can make an oral request for this SPSL payment, we're suggesting that you give them a written request form. You're entitled to ask for that request form because you need documentation for your records to know the basis of their claim. And you need to know who claimed it. And also, if there's problems, you can identify right then. We have a sample request form available. And if your consultant from CalWorks Safety has not provided it to you, send a request to info@calworkssafetyhr.com. Our reason for this is documentation is going to be important for defense, because employees are going to say, well, I asked my foreman and he never said anything. Well, the foreman maybe didn't understand the law, maybe didn't tell you in the office, who knows? But you want to have a process where you document what's going on. Any payments that are under this COVID SPSL need to be shown separately from regular pay on your pay stub or a printed statement you provide workers. Many companies do automatic deposit of paychecks, but they still need to find a way to provide this pay stub information or payment statement information. The requirement is that you provide up to 40 hours of pay for employees, and then they can also qualify for an additional 40 hours, up to 80 hours. But beyond the first 40, you can require a positive test. And if they're requiring time off for family member care, you can require a positive test. To receive more than 40 hours of SPL, employee must return positive. And let me just say, this time period for this benefit is January 1 through September of this year. Any paid sick leave they received in 2020 or 2021 does not count toward this new 2022 SPSL. You cannot make an employee use their regular paid sick leave or vacation time before qualifying for this payment. And that regular vacation, paid sick leave, we're talking about the 3 days per year that you need to provide employees, accruing a rate of 1 hour sick pay for every 30 hours of work. So you can say, well, we have that, we don't have to make this SPSL payment. No, doesn't work that way. This is a special benefit which the legislature wants employers to bear. But you don't have to pay COVID SPSL when an employee is getting SDI, state disability insurance, from EDD or work comp. Now, this work comp part becomes important because if the source of the COVID is work-related, meaning that they didn't say, I have COVID, I tested positive because of family members or going to the Super Bowl or whatever they did. But if it's a work-related basis, then it's covered by workers' comp. The statute says that you do not have to pay COVID SPSL when they receive workers' comp benefits. The problem, and I want to caution all of us, is we're waiting for publishing of what they call frequently asked questions by DIR to interpret what they understand the law to be. Because workers' comp benefit is only about 2/3 of regular pay, which is also about the amount of money they would get if they filed an EDD state disability claim. So we're concerned that employees may claim the balance or shortage of that payment from the regular pay. This is an area we're watching carefully and we would expect to have some information on. But right now, I would not start paying SPSL payment if somebody's on SDI or has a workers' comp eligibility. Retroactivity for pay for any time from January 1st to now should be given at your next regular pay date. Now, when this applies, obviously, number one is somebody tests positive for COVID. But there are other isolation rules, and these rules come from the California Department of Public Health. So that under the current rules, if you test positive for COVID, they have to isolate for 5 days. They can possibly get an additional 5 days of isolation, which is also the 80 hours covered by Spsl, but they have to test positive after the 5th day. Fully vaccinated people who are fully vaccinated and including receiving boosters don't have to isolate if they're asymptomatic. Even if they, but if they test positive, they're covered by the first rule. But if they don't test positive, they can continue to work, but they need to get a negative test after day 5. Unvaccinated people must quarantine for 5 days and can return to work if they test negative and have no symptoms after the 5 days. Otherwise, they're to isolate for 10 days. If somebody chooses not to test or won't test, they must quarantine for 10 days, but must test to receive more than 40 hours of COVID Spsl. I realize this is confusing because we're matching isolation rules, which are grafted onto the requirement to pay this special supplemental paid sick leave. Another one is, how do you know somebody tests? And I go back to the CalOSHA rule, which applies for that question, to say basically, a person cannot self-administer and self-read their own tests. They have to do it in front of or with somebody else. So we can use take-home tests, proctored tests, in which case you need to have, for that to be eligible, the employee needs to be able to show that he's the person who took the test and what the test results were. Some employers are using online video or FaceTime techniques to use that. But I don't want to let you think that the employee just to say, well, I tested and that's all I have to do. He has to have some evidence of the test. Now, he can go to a drugstore like Walgreens or CVS, et cetera, to get testing. And there are a number of free test sites. The employer needs to pay for the time to take the test and also for any time if a person has complications after getting a vaccination. I do want you to be aware of how serious this is, because this is covered under CalOSHA now. And regulatory or general violations, which most of these COVID-related violations would be, for 2022 now start at $18,000 per violation. If it's a serious violation, and particularly if someone got ill because of a violation of the rules, that's a potential fine that starts at $25,000. Employers who have multiple violations or many locations at work may have the new egregious violation or enterprise violation, Rule 3. And that's a little more than we want to cover this morning, other than just to alert you that financially the consequences of not following through are significant. To help our clients and anybody who's interested, we're suggesting that you have a safety audit, to have somebody check your COVID plans and other documentation to help avoid or prevent these CalOSHA fines. And also an element in CalOSHA fines are good faith. So doing something like a safety audit will be an evidence of your good faith. So we are making available safety audits to our team, and we're here to help you. I know this is complex. Please feel free to let us know if we can get more. With that, I'll turn it back.
Thank you, Don. Presenting next is Brett R. Strauss. Brett is Director of Compliance at Southland Data Processing. Please welcome Brett.
Hey guys, thank you for having me today. Give me one moment here. Let me get the slides up for everyone. All right. All right. Today I'm going to be talking briefly here about the CalSavers requirement. If you're not up to speed on what's coming your way by the end of June this year, I'll walk you through that I appreciate you, Don, walking through all of the pretty dense COVID legislation. It seems like it changes every day. There's a lot of conflicting information there between the OSHA and depending on what county you're in. So I think that's very valuable. Thank you for covering that. Again, about me, I'm Brett. My company is called Southland Data Processing. I know I've met most of you guys in the past. I've been asked to speak before with Don and Cindy. Southland Data Processing is a local payroll service provider. So we're located here in Upland, right off the 10 freeway near the Ontario Airport. I know many of you are familiar with ADP and Paychex and Paycom and some of these bigger payroll service platforms. What I do here, though, is get involved on the front end to make sure that all of our clients have all of these bells and whistles on the payroll side buttoned down. So we do a great job of building everything customized for our clients, especially some of these accruals and some of these documents. If you need some more guidance, then we certainly send you back over to Dressler and CalWorks Safety to get your audits and your HR compliance. But just on the day-to-day payroll, a lot of the stuff Don's mentioning, with documentation and stubs and all of that fun stuff is kind of where we hang our hat. All right, CalSavers, what are we talking about here today? Just a quick, obviously I'll send these slides over so that they can share them with you. Southland Data Processing is not a law firm. I am a licensed attorney, but all of the documentation and notes that we're going to be sharing today are just for informational purposes only, and they will differentiate depending on the shape and size of your business. Okay, CalSavers is a California state-sponsored retirement plan option. So as about 2 years ago, the state of California decided that all employers with 5 or more employees must offer some type of retirement plan. Okay, it doesn't necessarily have to be a 401k. It doesn't have to be a private plan through a local advisor. There has to be something. Okay, so we started off back in 2020, and they went after all of the larger employers, upwards of 100. And then last year in 2021, they went to the more medium-sized businesses of 100 or more. Okay, and now what we're looking at is the remaining companies. So if you already have a 401k or you already have some type of IRA or retirement plan, then you're in compliance. That you're already ahead of the curve. If you don't have some type of retirement plan option for your employees, then now's the time to start sharpening your pencil to figure out where to go from here. Okay, the state of California plan is free for employers, and there's the website for you at calsavers.com. Okay, and the most important piece is kind of going through that red tape there to get yourself enrolled, so that way you can set up all of the information, you can offer it to the employees, and you can make sure that you have to your payroll provider well in advance all of the different deductions. Okay, so there's that deadline, June 30th of 2022. Okay, a lot of people ask, well, Brett, as the employer, what does that mean for me? Do we have to, do I have to pay for it? Do I have to offer a match? Is there some type of safe harbor provisions? And the answer to all that is no. Okay, I advise my clients that come to me that this is how I would manage this if I were you. If as of today, middle of February, you don't have a retirement plan option, I would reach out to either CalWorks Safety or your bank or your CPA, somebody that you trust, and ask for an introduction to an advisor if you don't have one already. Okay, my first step would be meeting with an advisor, somebody who does this for a living that can help you navigate how to move forward. Okay, the state of California plan, like I said, is free. It's a great fallback option. It might not be the best option for you, depending on how your organization is structured, depending on how many employees that you have and the demographic of your employees. Some of our clients say, well, we only have a handful of people, and we're at about 8 or 9 employees, and some of the ownership, the highly compensated employees, would prefer to have an IRA plan or a 401k. And yes, there's costs associated with that, but from top to bottom, a plan to be able to support the C-level employees, And then also something that would be helpful for the rank and file employees, that might be a better option than just adopting this CalSavers plan. Okay, so what's going to happen is that's my advice to you would be to reach out to an advisor first, let them figure out, talk you through this and say, yeah, you know what, a 401k, might cost, $2,000, $3,000, $4,000 in administration fees, and it's probably not worth it, due to the demographic of your employees. You have, you're in the retail business or a restaurant and you have high turnover. It's probably not going to work out for you. Maybe you should adopt CalSavers. And then from there, then you're just on your own going through the step-by-step process there to enroll. You're going to register and let them know, okay, how many employees you have. You're going to send them all of your company information, and then they're going to help you then message it to your employees. Okay, and if the employees choose not to participate, that's not your responsibility. Okay, you just simply have to keep record that you enrolled and that you offered. Okay, and then obviously if they do want to step in and contribute, then you're just there's a little sheet to fill out. You remit that then to your payroll company. Our clients send that directly over to me in my compliance department. We go in and help them key in the deductions and make sure that everything's kind of set up moving forward. Okay, here's some a little bit more detail on what these CalSaver plans, what's allowed and what's not allowed. Okay, how much you can contribute, eligibility. Okay, you cannot have on the not allowed slide there on the bottom. You cannot associate a broker for compensation. You can have, if you have an advisor or a broker, they can help you, but they're not going to be getting paid, right? So a lot of brokers, a lot of advisors, that's how they, make a living, right? Is that they will guide you, and then they also are able to receive compensation from some of the bigger fund managers on the back end. So I'm sure they all know this by now, but just so you guys know, if you have somebody that you currently work with and CalSavers is where you go, they may or may not be able to support you moving forward. There's also no loans, right? So in a traditional 401k, you'd be able to have your employees borrow against the amount that they have in their account, right? It's usually not the best option, but it is available there in a traditional 401k. In the CalSavers plan, you're not allowed to do that. So a lot of people have been asking me about that. Well, my employees are always coming to me, and I'm not in the loan business. We don't do cash advance or payroll loans, and I agree, you shouldn't do that. There are third-party now financial technology companies. I know that we have a few partners here at SDP that we recommend to our clients, so that way your employees are not borrowing from their retirement and missing out on a lot of the gains, especially over this last year and a half. Okay. Exempt options. Okay, so here's what if I already have a 401k, or we're a nonprofit, we've got a 403b, profit sharing, simple IRA, SEP, right? All of these defined benefit or cash balance plans. If you have something like this already, you're good to go. You don't have to worry about going down this path. Okay, but again, I mean, as an attorney, there's a lot of moving pieces here. You should probably reach out to a certified financial planner, somebody that you know and trust that understands the inner workings of your organization and can map something out that's going to help both employer and employees, so that you don't get stuck in a situation where you spend money on a 401k, but your ownership are the only people that are putting money aside, and now you're failing your annual test, and you have to then pull money out before the 5500 form is filed at the end of the year. So you don't want to do that. There's always a happy medium that can be implemented. That's going to be great for both employer and employee. But that's kind of the next step here, is to reach out to that advisor before you go enroll yourself. Another thing that's important when it comes to the reporting mechanism now on CalSavers, a lot of people have we'll go back here. A lot of people have, right now, if you have a 401k, there's a lot of platforms that are automated where they kind of send things and it goes to, Principal or John Hancock or wherever you have your 401k set up. CalSavers is still ironing out some of these wrinkles. They do have an API, so I know on my payroll side, we're able to create report functions and files to shell out to them every pay period to help you manage that. Some payroll providers don't have that set up, so that they're still working through some of those kinks. So that's another thing too. If you do go down the CalSavers path, make sure that you're talking to your payroll company and that they have a file that you're going to be able to use and just upload. So you're not now sitting there every pay period trying to manually key everything back into CalSavers and potentially making a mess for yourself. So that's pretty much it. There's not a whole lot, to jump into here on the retirement side. It's just one of those things that we're about 90 days out. So it takes a while to go through the red tape. Just make sure that you're all over it. Another question I get asked is common ownership. Well, I've got a couple small businesses and I've got a few employees here and a few employees there. State of California is absolutely going to look at common ownership. So if you have multi-locations, we have a few people that have like little coffee shops and they've got 1 or 2 employees here and 2 over here, they're going to aggregate those and expect that you comply with the retirement option. Okay, so again, they're not forcing you to adopt their plan, but you have to have a plan by June 30th. So thank you guys, and kind of turn it back over and see if there are any questions that you might have, whether it's on the retirement stuff or on any of the COVID things that Don was talking about.
All right, so we have a couple questions here. Thank you so much, Brett, for sharing.
Mhm.
First question, CDC website indicates that fully vaccinated does not include booster. It indicates the booster is considered optimally covered. Can you explain why in California a mask is required indoors where you obtained this information?
Okay, so one of the problems that we've all had dealing with this COVID issue, and you've seen it for months and months and months, is you have a multiple number of agencies involved who all have their own roles and their own opinions. So you have the Centers for Disease Control, you have Food and Drug Administration. In California, we have the California Department of Public Health, we have CalOSHA. We also have county public health departments like Los Angeles County, City of Los Angeles, Pasadena, Malibu, who have all been very active and aggressive in their own rules and regulations. The CDC, unless it's otherwise provided by California law, is not law. However, the California Department of Public Health and the CalOSHA rules are the law. And then above that, additionally, more stringent could be local jurisdictions, which we see in San Francisco and Los Angeles. So the point is, and the one thing that happened well in January is the governor issued an executive order essentially for enforcement purposes, combining the Department of Public Health rules and guidance with CalOSHA. So we have one set for what is the isolation requirements, what is the vaccination, who's fully vaccinated. And it's the CalOSHA and Public Health Department combined rulings that say in California to be fully vaccinated, you have to be vaccinated and boosted as appropriate or eligible for you. So that's why there's this discrepancy. My suggestion would be that you go to CalCovid, Google that if you needed California rules. You can also get help from the California Department of Public Health. LA County Department of Public Health has good information. LA City is not quite as available. It's also there. But I would suggest if you're not in Los Angeles County, that you go to either CalOSHA or the California Department of Public Health, who both have these and are generally found under COVID-19 CA Google searches. So I hope that helps that.
What are the current indoor mask mandates for Orange County, and can fully vaccinated employees now go maskless?
In Orange County, we've adopted the California Department of Public Health rule, which says mask requirements, unless you're in public health environments, which is a different set of rules for healthcare providers, nursing homes, hospitals, medical offices, so on. But other than in the healthcare setting, in all of Southern California, that includes San Diego, Orange County, Riverside, and San Bernardino, the indoor mask requirements only apply to unvaccinated or unboosted people, which is again why employers need to know who is on what list for rules, because you're charged with enforcing these rules. If an employee says the employer isn't paying attention to the rules, they can and have filed complaints with CalOSHA. CalOSHA has special inspectors to investigate COVID-related violations. The Department of Public Health is pretty well overwhelmed. They're not much out doing enforcement now, except in restaurant facilities. But CalOSHA certainly would enforce these rules. So the general rule is vaccinated and boosted people do not have to wear a mask indoors.
Right. Then you also have too, Don, and I don't know if you come across this, but I know our clients do, is, you know, the HR issue, right? Well, how come he doesn't have to wear a mask and I do? And a lot of supervisors have a difficult time enforcing that. It's a
That's
mess.
true. It is, and also you're not supposed to reveal the list of who is vaccinated and who is not vaccinated because it's confidential, private information.
Yeah.
But my only answer to that is to say it's not fair. Fair is a place over in Pomona where you can go watch animals and ride rides.
Right.
This is the job. By the way, you can have a mask requirement for everybody if you want. That's not a state rule, but you're entitled as an employer, if you don't want to put up with it,
Right.
to have a mandated mask. And many employers would have people serving the public, like in retail settings and restaurants, continue to ask their employees to be masked.
Right. I agree.
Does an employer get reimbursed from the state after paying Spsl sick time?
This is the most confusing part of this whole law. There were a number of special changes to raise additional state tax revenue in 2020. And these changes, such as business loss carry forward and so on, we're not going to come back until 2023 or 2024. To help pay for the cost of this new special paid leave policy, the legislature removed some of those restrictions on business taxes. But my best answer is you need to talk to your tax advisor who helps your business. It's not a simple credit against payroll taxes the way the federal law was in 2021. That all expired last year. But there is the potential for some financial help for these costs. And it's in the nature of millions of dollars, but you have to qualify for the treatment. And that's going to depend on your own company and your own tax status.
Can you talk about how exclusion pay coordinates with the new paid sick leave?
Essentially, exclusion pay is under CalOSHA and applied to people who couldn't work because of a work-related coronavirus infection. Candidly, the overwhelming majority of cases that I've dealt with and our clients have dealt with have not necessarily been or not provably work-related. Employees often either will acknowledge family members or friends have COVID, or they went to certain events, or they just don't know, which is one of the reasons we're suggesting you have a written request form, because on the request form, you're going to ask what was the source of this COVID. But the exclusion pay you're referring to comes out of CalOSHA, but the new paid sick leave is much broader than that and applies to a person who tests positive from any source. So the exclusion periods, which are the guidance of how long to stay off work, come out of the California Department of Public Health, which CalOSHA has adopted.
Yeah, that's a good question. I had a situation yesterday. A client called in and I put a simple example together, and I'll share it. It's exactly what Don's talking about, but it might be easier to understand, right? So under exclusion pay, let's just say Jake and I are in the office today, and Jake was at a Super Bowl party over the weekend. He's having a good time, and he's got the sniffles, and he's like, yeah, it's probably just allergies, so I'm going to come in the office today. So Jake and I are working together, and then in a day or two, I'm not feeling well, and I find out Jake was actually tested positive, right? So due to no fault of my own, I now have COVID, and I got it presumably from Jake because we were working together. So in that situation, right, the employer would have to pay me under exclusion pay, right? That I'd have to be excluded from the workplace for an X amount of days, right, until I'm able to return, depending on my vaccination status, right? But that would be exclusion pay. Okay. Now, while I'm home, right, the whole week or so that I'm home getting better, I've got 2 small children, and one of them came in contact with me, and now my son is positive with COVID, and he can't go to school. So I'm going to call Don and say, hey, Don, guess what? I'm eligible to return to work, but my son has to stay home from school. And now I need to get paid under, this new assembly bill because I can't work from home. He can't go to school. I'm going to need at least 40 hours now under this new plan in the state of California, right? So that's how this can play out, depending on the qualifiers. And they're 2 separate buckets, right? And they need to be accounted for separately on payroll and, on that request form. But I think that's just a cut and dry example of how this might look. And they're not aggregate, they're completely separate.
Well, let me just add on to what Brett just said. If he got sick because he was at work with a coworker who tested positive, that's eligible for coverage under the workers' comp insurance temporary disability.
Right.
So workers, you need to notify the workers' comp insurer of that illness and then have them pay for temporary disability.
Mm-hmm.
But there are some limits on what temporary disability eligibility is. If it's covered by temporary disability under workers' comp, you don't have to pay the paid sick leave. At least that's the wording of the statute. And we know that sick leave pay is 100% of pay, but work comp benefits are only 2/3 of pay. So that's an issue that we all have to watch.
Right.
But I just wanted to add, that's another wrinkle.
Yeah, there are plenty of wrinkles.
And that's why you ask questions, to ask the people fill out a form, because it's hard enough to figure this out without full information.
Definitely.
If an employee tested positive in December 2021, do they still qualify for COVID paid sick leave if it is in the 10-day quarantine period?
No, the law takes effect January 1st. Well, if they can't work after January 1st, they're eligible. But the test for last year by itself, it does not trigger eligibility. So that's a kind of one of those loaded questions. When and how long did they have to stay off work in January of 2022?
Yep.
If an employee has been separated from the company, may they request for Spsl in January still?
The law does not state that they have to be current employees for this benefit. I think that the interpretation is going to be terminated employees who would have been eligible for this supplemental pay in January, since for January 1st, are still entitled to it if they make a request.
Yep, I agree.
Are there any special pay stub rules for exclusion pay?
I'll turn to Brett on.
Yeah, I mean, look, the rule of thumb on all this stuff when it comes to the labor code and what needs to be on a pay stub is it should just be itemized. Okay, you should not. The mistake that you would make is putting it all under the California sick bucket, right? That's not how it should be treated, right? So you should have a separate code for each of these, right? So you should have your PTO or vacation, right? California sick, that's your 24 or 48 or however many you are giving the employees depending on the municipality that you're in. Under that, we should have COVID exclusion, right? CEXL or whatever, however you want to call it. And that's if under the OSHA rules, if they had to be excluded, you'd put that in there. And then now we'd have Spsl again, so that if you're going to pay them now under this new law. So that's the only thing that I would recommend, is that you have separate buckets for each of these. So that way you can account for, especially that Don was talking about, when you go to talk with your CPA and you're looking at whether or not you are eligible for some type of tax relief, you're going to want to make sure that you have this spelled out so you know what was under the OSHA rule, what was under this new law, how much was just regular California sick, so you can absolutely get what you're entitled to.
Does exclusion pay apply to every employer or only those with 25 employees or more?
The good news is it only applies to employer. Well, the CalOSHA rule applies to all employers, which is work-related COVID cases. But the general rule, which we've been talking about today, only applies to employers that have 25 or more employees.
All right. Do we have any more questions? Other than posting a notice, do we need to notify the employees about the supplemental paid sick leave?
No, the requirement is that you post this new notice. And I think we all know if you post a notice, how many people can't wait to get to work and go leave the bulletin board. But people are going to hear about this and talk about it from their friends.
Right.
So although you don't have to issue a notice other than the poster, I think you need to be ready for when employees come to you and ask about it. And that's where this request pay orally or in writing comes into play. And yes, they can request it orally, but you still need the paperwork. And that's why we're suggesting the request form.
Correct.
Will you be sending a notice to post? We will be uploading this, the recording of today's session to YouTube and a copy of the slides. Do we have any more questions?
The copy of the slides will be available by sending an email to info@CalWorkSafety.HR. We will post the recording on our CalWorkSafety YouTube channel. That usually takes a little while, maybe a day to get posted. But we can send you the posters if you'll send an email to info@CalWorkSafety.HR.com. Quicker, you can go to Google the California Department of Industrial Relations at the site that I addressed, which is basically, if you went to www.dir.ca.gov, you'll find a link to the posters.
Great.
That's the
Don,
quickest way to get it.
thank you so much, Don, and thank you, Brett. Brett, do you have anything else to say?
No, I appreciate you guys for inviting me to join in today. It's always a pleasure. Hope everybody has a great afternoon.
Let me just do one editorial or commercial. We have found Southland Data Processing to be a really uniquely capable payroll provider. And they have their own programming capabilities, so they're not relying on somebody else's doing their information work for them, which is why they're able to adapt to all these changes and rules. There are a number of good payroll services, don't misunderstand me, but I did want to say thanks to Brett and his firm because they are a good provider of payroll services for clients.
Thank you, Don.
Well, thank you for sharing. This is an important topic. And remember, if we didn't address your questions today, go ahead and reach out to us at info@calworksafetyhr.com. As a reminder, CalWork Safety and HR is dedicated to helping businesses remain compliant and successful during the COVID-19 pandemic. Again, please be on the lookout for future topics at our website at calworksafety.com. Thank you for joining us. Stay safe, healthy, and have a wonderful day.